Top 5 Most Active Stocks by Volume. Welcome to StockRhino. Every trading day, you'll hear about the most active stocks by volume, the stocks that everyone is buying, selling, and talking about. But what does most active by volume really mean? Does high volume signal a buy, a sell, or just noise? In this video, we'll decode what volume tells you, why it matters, and how smart traders use this data to make confident, profitable decisions. What does most active by volume mean? Volume represents the number of shares traded during a specific time, usually in a single trading session. So, when we say most active stocks by volume, it simply means the stocks with the highest number of shares bought and sold during that period. It doesn't always mean the price went up, it just means massive participation is happening. Why volume matters? Volume is like the heartbeat of the market. High volume means strong activity, liquidity, and investor interest. It shows that many traders agree on the price movement, giving it credibility. Remember, price shows direction, but volume shows conviction. How volume confirms price movement. When a stock rises on high volume, it signals genuine buying strength. When it falls with high volume, it reflects serious selling pressure. On the other hand, low-volume price moves are weak, they often fade quickly. That's why professional traders always confirm price trends with volume. Example. Stock A jumps 5% on 10,000 shares traded. Stock B jumps 5% on 50 lakh shares traded. Even though both moved 5%, Stock B's rally is more meaningful because it's backed by strong participation. That's the power of volume. Why traders track most active stocks by volume? Traders love this list because it reveals where the action is. High volume means easier entries and exits, better liquidity, strong momentum stocks for intraday trading, clear signals of institutional or big player activity. Institutional activity and volume. Most of the time, when you see a stock topping the volume chart, it's because institutional investors, mutual funds, FIIs, or big traders are active. They move in large quantities, and that's what pushes daily traded volumes higher. Spotting this early can help you follow the smart money. Volume and volatility. High volume usually comes with high volatility, prices move faster, wider, and more aggressively. That's where opportunities exist, but also where discipline matters. Remember, volume fuels volatility, and volatility fuels profit only if you manage risk well. Difference between volume and value. Don't confuse volume with value. Volume equals number of shares traded. Value equals total money traded, price times volume. A stock can have huge volume but low value, like penny stocks, while blue chips may have lower volume but much higher value. How to read the data smartly. You can find the most active by volume list on NSE, BSE, or your broker's app. But don't just look at numbers, check these 3 things. Price direction, is it rising or falling? Volume consistency, one-day spike or continuous trend? Delivery percentage, are traders holding or just intraday flipping? Common mistakes. Avoid these mistakes. Jumping into high-volume stocks blindly. Ignoring price direction, not every spike is bullish. Trading purely on popularity. How StockRhino uses volume analysis. At StockRhino, we teach traders to decode volume like professionals. We combine volume plus price plus delivery data, institutional activity tracking, pattern-based confirmations. Applying volume in your strategy. Here's how you can apply this. Track the top volume stocks daily. Wait for volume plus price confirmation. Trade only when both direction and participation align. Key takeaways. Most active stocks by volume shows where traders are most engaged. High volume equals high participation and liquidity. Combine volume with price and direction for accuracy. Want to learn more? Visit our website.